Crypto has grown from a small online curiosity into one of the most debated subjects in modern finance. It entered the public scene as an experiment that explored the idea of money without a central authority. Over time it evolved into a global phenomenon with millions of users and a large influence on financial thinking across many countries. To understand the place of crypto in the world financial system, it is important to follow how it began, how it grew, and how it shaped the views of investors, regulators, and ordinary people. The early idea behind crypto was a search for freedom in value transfer. People wanted a form of money that could move across the world without the permission of a bank or a government institution. This idea attracted communities that valued independence and innovation. Later on, it attracted professional investors who saw new potential for profit and new channels for financial activity. Even though early crypto networks had technical limits and slow transaction speed, they introduced a vision of a digital monetary world that could operate through computers without the need for human intermediaries. The world financial system is mostly built on trust. Banks hold deposits. Central banks manage currency stability. Governments regulate financial behavior. Crypto stepped into this structure and offered an alternative form of trust. Instead of trusting a bank, people are asked to trust a public ledger that is maintained by computers around the world. This idea is complex, but it has a strong emotional appeal. Many people believe that a system based on open code is safer than a system based on large human institutions. Crypto also challenged the meaning of ownership. In traditional finance, ownership is confirmed through legal documents managed by land offices or banks. In crypto, ownership is confirmed through control of a private key. This shifted the focus from institutional verification to personal responsibility. This shift created excitement but also fear. Someone who loses the private key loses full access to the asset with no institution that can recover it. This level of personal control is one of the reasons some people love crypto and others avoid it. Another important part of the global role of crypto is its effect on borderless finance. Traditional international transfers can be slow and expensive. Crypto transfers often move in minutes and can cross the world with very small fees. People who live in countries with unstable currencies see crypto as a safe place to store value. People who send money to other countries see it as a practical alternative to slow banking systems. These real use cases are important because they show that crypto is not only a speculative tool but also a functional financial channel. Crypto markets created a new category of assets. These assets behave differently from stocks, real estate, or gold. They are highly volatile and sensitive to global news. A single announcement from a large company or a change in government policy can move prices within hours. This volatility brings risk but also opportunity. Many investors see crypto as a high-reward area that can outpace traditional assets. Others see it as a dangerous and unpredictable field. Both views exist at the same time and show how complex the place of crypto has become. The arrival of crypto also inspired governments and central banks to explore digital currency. Many countries now research or test official digital currency systems. These systems are not the same as crypto because they remain controlled by central banks. Still, the idea came from crypto and shows how innovation in one area can transform the entire structure of global finance. Even when governments resist crypto, they still adapt digital tools that were influenced by it. Crypto changed how new companies raise funds. Traditional companies often need approval from banks or investment firms. Crypto projects introduced a method where people can fund a new idea through public token sales. This method attracted large sums of money and allowed many new projects to grow quickly. It also created problems when some projects failed or turned out to be dishonest. As a result, regulators began to pay more attention and introduced new rules to protect investors. The push and pull between innovation and regulation continues to shape the place of crypto in the global system. Another major influence of crypto is the rise of digital ownership for art and online goods. Through technology that tracks unique digital items, people can buy and sell art or collectible items online in a secure way. This created a new digital creative economy that was impossible before. It also sparked debate about value and authenticity. Some people believe that digital art can have real cultural and financial value. Others believe that digital items will not hold value for long. The debate continues and affects how public opinion sees the broader crypto world. Crypto also encourages financial literacy. Many young people who never cared about banks or investment learned about supply, demand, inflation, and digital security because of crypto. This rise in public financial awareness is one of the positive effects of crypto on society. Even people who choose not to invest in crypto still learn from the discussions and gain better understanding of the world financial system. The environmental impact of crypto has become another global topic. Some early crypto networks used a system that required large computing power. This created concerns about energy use. In response, some projects began to explore more energy-efficient methods. This change shows that the crypto world can evolve based on public pressure and scientific research. It also shows that the place of crypto in the world is shaped not only by economics but also by social values. Crypto also influenced the idea of privacy. In regular finance, most transactions are recorded by banks and known to the government. Crypto offered a different model where transactions are public on the ledger but the identity of the user can remain private unless revealed. This balance between transparency and personal privacy created new ethical and legal questions. Regulators want to stop illegal financial activity but also face the challenge of respecting personal rights. The world financial system now must adapt to these new expectations. The global influence of crypto is not uniform. Some countries accept it openly. Some restrict it. Some use it for national projects. Others see it as a threat. In countries with high economic stability, crypto is often treated as a high-risk investment. In countries with unstable currency, it can be viewed as a safe alternative. This difference shows that the place of crypto in the world system depends greatly on local economic conditions. Crypto also changed public expectations about speed and transparency. When people see that a transaction can settle in seconds, they start asking why bank transfers take days. When people see open code that runs a financial network, they ask why traditional financial systems are not more transparent. These questions push banks and governments to modernize their systems. Even if crypto does not replace the global financial system, it pressures it to improve. The rise of crypto communities also created global networks of people who share ideas and coordinate projects without meeting in person. Some of these communities built impressive financial tools that work without central control. Others focused on social impact and tried to create fairer financial models for people in poorer regions. These experiments show that crypto is not only about money but also about new ways of organizing human cooperation. Crypto also introduced the idea of programmable money. Traditional currency stays the same unless someone changes the law. Crypto can be written with rules that activate automatically. For example, a payment can be released only after a condition is met. This ability to program financial behavior opened the door for new business models and new types of contracts. It also created new legal challenges because the law in many countries was not designed for automated digital agreements. The position of crypto in the world financial system today is a mixture of promise and uncertainty. It offers global access, fast transfers, personal control, and new economic possibilities. At the same time, it faces challenges from regulation, market volatility, energy concerns, and public misunderstanding. Because of these mixed dynamics, crypto remains a field that evolves constantly. No single country or institution controls the future of crypto. Instead, it grows through the decisions of millions of users, developers, investors, and regulators. This makes crypto a unique part of the financial world. It is not a traditional currency. It is not a traditional technology. It is a combination of both and continues to influence how society thinks about value, money, and digital ownership. In the future, crypto may become more integrated with banks and governments. Or it may remain an alternative system used by certain groups. Or it may grow into a major global standard. Each of these possibilities shapes daily conversations among experts and ordinary people. What is clear is that crypto has already left a permanent mark on the world financial system. It changed how people think, how money moves, and how global finance evolves. Crypto also represents a larger shift in the world. The shift from physical systems to digital ones. The shift from central control to distributed control. The shift from passive financial participation to active involvement. These shifts will continue even if specific crypto projects rise or fall. The general direction of change is clear. Society is moving toward a future where digital value plays a central role in global finance. The continuing story of crypto is not finished. It keeps growing and transforming with every new idea and every new challenge. Its real place in the world financial system is not fixed. It is shaped every day by human action and global events. This ongoing movement is one of the reasons crypto remains one of the most dynamic subjects in modern financial history.